Welcome back. You're watching Big Deal, and we have the entire top team of EQT India right here in the studios. Now, Hari, we were discussing about the kind of success that your firm has had in the IT services investment in the country. Now, with so much technological advancement, and now AI has become a household name since last year. How do you see the IT services, pure play, and the real OGs in this particular sector in terms of their growth potential? Do you think that they are still meaningful investments for private equity?
Thanks, Nisha. So, if you take a step back, the overall tech services industry is estimated at 1.5 trillion. Okay, our largest tech services company from India is probably shy of 30 billion. Okay, so there's still a long runway for India IT services, and we believe that there are so many avenues for growth in terms of just the things that are happening. If I look at a technology like the cloud, for example, it's still only 40% penetrated, even though workloads have been moving to the cloud for the past 15 years, right? So cloud itself is an opportunity for the next 10 years. And with Gen AI, we've just scratched the surface of the opportunity. So we continue to be very excited about the space. We first made our first investment in tech services was 25 years ago in a company called Mphasis. Okay, so we've been active in the space for 25 years, and we still continue to be excited about the opportunity here.
All right, so given your experience in the sector, you still find growth potential in the space. So that's a really good backing for the IT services sector in the country. Now, Ashish, industrials, that is one area, and manufacturing in the country, which is really in the need of capital, which is capital intensive, but private equity has generally shied away from this space. Now with the growth potential, I am starting to hear some private equity players showing interest in this. Now, this is an area of your interest. Do you think you'll start making investments, and which are the themes that you'll look at?
Sure, you're absolutely right that industrials is increasingly becoming important for India. Given what we are seeing by way of Make in India and need for more robust and diverse supply chains, we are seeing emergence of control opportunity, which has been our focus. So going forward, you would see us being more active there and trying to develop opportunities of scale in that segment. They will be probably around export-oriented industrials and maybe services around the industrials market itself.
Does China Plus One aspect really rev up India's chances on this?
We believe so. We are seeing anecdotal evidence of increasing demand moving, or incremental demand moving to India. Which, given India's modest current base, is a meaningful percentage growth going forward, which is what excites investors like us from a long-term perspective.
Right. I can definitely say that you're not the only one who's interested in this particular space. But consumption is another area where a lot of private equity players have been a little disappointed. Given our demographic advantage, consumption was a clear choice. What is your sense? And do you think there are pockets of investment where you can capitalize your investment as well?
Yeah, so if you think about the medium term, the per capita GDP growth will definitely result in changing and improved consumption patterns. We would absolutely want to be taking benefit of that. The way we would probably prefer to do it is more in an indirect manner, whether it is potentially through healthcare services, maybe through financial services, for example, wealth management, or it could also be through some of these manufacturing companies, etc. That is sort of our preference, because we believe that's a better risk-adjusted returns for investors like us.
All right. So still to see in industrials as well as the consumption theme. Now, Jimmy, looking at all these sectors and the choice of sectors that you have, but one theme is really common is the difference between the public and the private valuation. Is that becoming a challenge? And what else do you see on the ground which could spoil the party? Because so far we've been just talking about the good stuff.
No, absolutely. So I'd say from a public or a private valuation perspective, there's always a gap. I'd say the gap is closing, and it's always a challenge when you're trying to get a transaction done or a deal done. I mean, I think the way we sort of do that is, we try and use a value creation playbook and underwrite higher growth or margin improvements I mean, most of the business, all the businesses we invest in are high growth businesses. So that's sort of the way we overcome the valuation mismatches, if you will. No, in terms of what we see in the country, I'd say from a GDP growth perspective, things are looking really good. If we look at all the underlying businesses we own, whether it's in financial services, in healthcare services, all the domestic businesses are actually exhibiting very high rates of growth. So at least for now, we feel very optimistic on the country and the economy.
Right, so very optimistic and very bullish. I have a counter question to that. I'll come to you on that. But Hari, pharma again, like financial services, there's so many pockets of available potential growth. Even in the healthcare space, we have seen that. Hospitals actually churned out the maximum number of deals, and that carries forward for this year as well. So there's enough traction in this particular space. But what about pharma? A large transaction didn't go anywhere. But do you think pharma again in India still has potential? What's your view on that?
Yes, absolutely. I think pharma again is a very unique sector. Of the total size of the pharma market estimated at 45 to 50 billion, half is domestic, half is international. So India has so much talent in terms of chemistry skills, in terms of manufacturing, et cetera, that can supply global supply chains as well as a great domestic market. So there's opportunity in both. And we are seeing early signs of buyout activity in that pharma space over the past 4 years. So we are optimistic that pharma will do well within India, and we are positioning ourselves well for that. I would say we thought about pharma, tech services, financial services, et cetera, and we found this thematic approach more than 10, 12 years ago. So if something doesn't happen for 6 months, doesn't shake our conviction, we continue to believe in these sectors that we have picked, and we're building our base along.
Right, and also you look at value buyouts and those opportunities where you can get a control because of succession issue or other such issues. That becomes a very big opportunity, which India has presented in some form. But Piyush, give us more sense about the investment strategy that you have in India in terms of overhauling some of the infrastructure businesses here. What is the kind of potential that you see? Because there are many optionalities, but money needs to be made for private equity to really bring in the funds.
So,
how do you see that particular piece?
I think, look, I think Jimmy mentioned this, regulation plays a big part. I think regulation policy making has been extremely positive in sectors.
Right.
All the thematic sectors we just talked about, industrial tech as an example, as Ashish mentioned, supply chain when you talk about it. The reality is for it to work well,
Yes.
for us to be, whether it's alternative China +1 or whether it's however we look at it, the reality is that the supply chain, the logistics, the transportation side of the country needs to improve, right?
Right.
Bring the cost down from where it is today.
Yes.
From our perspective, that's a big thematic play to do in India, and be able to transform that from a scale perspective.
Right.
So it's a fairly fragmented sector, and it requires the capital to be able to overhaul and actually scale it to the potential what we're trying to do across the economy. The second one would be also the same thing would be the energy and environment segment. So we talked about renewables as one, but there is a long way to go when you talk about EV charging, right? That's where the world's headed. If you look at the EV infrastructure we have and how it's rolled out, there's still regulation required significantly to be able
Yes.
to overhaul it and scale it.
Yes.
Similar on the waste side, again, you talk about industry, that means more waste creation. So what do we do with that? What do we do about recycling, right? So there is a lot to do and transform business.
Any one pick which you see is with highest potential in India?
I think on the waste side for sure.
Yes,
because
some
I
private equity money has come in from KKR in the past.
Yeah, there have been investments across different sizes of businesses. I think the question is around transformation,
Right.
And it's about value creation.
Right. And final question, and we have very little time, Jimmy, but you are more interested in buyout. That has been your strategy in most of the sectors. I have two live transactions I know about which are kind of co-control. Is that an area of interest for you, or will you be flexible towards that also?
So it certainly is an area of interest, but again, it really depends on who we're going to partner with, right? So there's certain corporates, certain sponsors that we'd consider working co-control on deals, but we are fundamentally a buyout control investor.
Right, but probably the sellers could have more choices with the kind of interest that global private equity is really showing in India. In one word, what's your moat to get the deals then?
Our thematic approach and a sector orientation. I know it's 4 words, but.
Yeah, but the big headline is that you're bullish on India.
Yes.
And thank you so much, gentlemen, Hari, Jimmy, Piyush, Ashish, for joining us here and giving an insight on the strategy of EQT India on Indian investments for this particular year. With that, it's a wrap on this edition of Big Deal, but keep it with CNBC TV 18.